Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Tuesday, August the 18th. Where the month is going, where the year is going, I ask myself that every morning, and I don't have the answers. Maybe you'll have the answers for me. But I do have the answers about what's going on with the global markets. Let's review what's going on with global economy. Then I want to talk a little about retail sales. And then I want to give you two pullback stocks because why? It's Pullback Tuesday. Don't you know anything? Let's get into it right now. So starting with global markets, shares were mixed in Europe and Asia on Tuesday. Technology stocks, they kept edging higher, closer to record highs in February. Just when we thought tech would cool off, they're heating up all over again. Markets, they were buoyed by Washington after Speaker Pelosi. Oh, that Pelosi. She's something, huh? Called the House back into session, cutting short the lawmakers' summer recess for a vote. Expected Saturday to prohibit change in the U.S. Postal Service amid growing concerns that Trump is trying to undermine the agency ahead of the elections. Who knows? The proposed package will include $25 billion to shore up the Postal Service, which is suffering losses. Prospects for additional economic aid for American workers remain uncertain after talks on fresh stimulus. Stalled. Yeah, they're like this right now with this postal workers and the Postal Service. It's a mess right now. Without more help from the U.S. economy, analysts say recovery that investors have been assuming is on its way won't materialize. That's big. And the assumption is a huge reason the stock market is as high as it is. So what that's telling you right here, folks, is the stock market is relying on this aid right now. And if we don't get it, the stock market's going to reflect that. The market's reflecting the fact that we are going to get aid. South Korea, oh boy. Health officials said Tuesday they have 457 coronavirus cases linked to a huge northern Seoul church led by a bitter critic of the country's president, driving an alarming rise in infections in the greater capital area. That's not good. On another note, crude oil prices are remaining above $40 a barrel, which is at least to a point where the companies will not be bleeding. Because anything below $40 a barrel, that means it's costing them money to accumulate crude oil, which is not how it's supposed to go. They're supposed to make money when they buy it, then they produce it, and then they resell it or use it. The bottom line is crude oil prices are tethering right at that edge. Now, I wanted to show you something interesting. Walmart online for pandemic supplies, many at walmart.com. Now, I mentioned this to you guys about 2-3 weeks ago, and I'll actually show you something right now. Let me show you this. This way you can't say I didn't tell you so. I told you guys about 2 weeks ago that retail stocks started making a comeback, and there's a lot of shipping going on. That's why UPS, FedEx is in my top 5-6 stocks on my relative strength scan. But remember what I told you guys? L Brands. Where's that Gap? Gap was here as well. Fortune Brands, Gap is right here. Best Buys, eBay. People are starting to shop again at record levels, but they're doing it online, which is why the freight shippers are doing so well. And just to show you what I'm talking about, look at this. American established trusted supply line as the virus surged in new regions of the U.S. over the past few months. And millions did so as Walmart, where online sales surged 97%. So people are saying enough of this. I got to get my goods. I got to get my things. So people are buying. They're just turning onto online channels. The question is, will this fade or will it continue? And my guess is a lot of people who are now starting to buy online are not going to go back to traditional brick and mortars. Like my wife, for example, she started buying groceries, a delivery. She said she'd never do it. And now she's finding that the groceries they're delivering are just as good as the ones that she picked. So she's converted. So this may have an impact on our society if it continues. It's certainly making an impact right now. Walmart topped almost all expectations by wide margins, and company shares, which hit all-time highs on Monday, jumped another 6% before the opening bell. Consumers had begun to establish supply channels during the first 3 months of the year, sending Walmart online sales up 74%. Now they're up 97%. The trend accelerated in the second quarter and broadened the gap between traditional retailers, many of them anchor stores and the mall, and big box operators like Walmart, Target. You see what I'm saying here? This is a trend. With unemployment in the U.S. hitting frightened high levels, Walmart's ability to deliver low-price food, clothes, and electronics strengthen its structural advantage further. Now, what I'm reading to you right now is not just applying to Walmart. It's applying to the entire retail sector. Walmart is obviously getting the biggest part of it because, well, it's Walmart. It was popular to begin with. But think about it. Other retailers like Gap, L Brands, Target, they're starting to see a lot of online purchases, all right? So that is something that's going on, and I think this is going to continue. And I wanted to use Walmart.com as an example because it's happening all over the place. If it's happening in Walmart, it's happening everywhere else. Now, as far as the overall market, I am starting to see a little, the bullish sentiment is a little overbought, which is telling us that that rubber band needs to cool off. It's a little stretched out. And this may be why today is Pullback Tuesday. I'm going to give you the strongest stock pulling back, and I'm going to give you the weakest stock. And when I say the strongest stock, I want to show you something here. This is the cumulative strength index. Look where PayPal is. PayPal is 1, 2, 3, 4, fifth stock in the NASDAQ 100 in terms of strength. So it is pulling back. The high is 205. It went all the way to 186. So it lost about 20 points, and now it's 195. It gained about half of it back, and I believe the stock is going to be making new highs over the next month. The odds are pretty strong, especially if things continued the way they are. Because what happens when people start shopping online? As they are. What happens when people buy online? Who do they use? They use PayPal to pay through everything. PayPal, Square Pay, Stripe, these are some of the biggest online payment processors. People use PayPal to pay online. And PayPal has been hot during the entire COVID-19, as you could see right here. Earnings were positive. It went higher, made all-time highs. Now it's pulling back. I would put a buy stop right at the 198.50 level, 198.30 level. And if it breaks the low, the swing low, which is 185, I would get out of it. So again, I would buy right around the 198 level, 198, 198.30, I keep going to 198.37, but it's just put a buy stop right around a little bit above where we're at now. It's already going to open at 196.60. I would put a buy stop right at the 198.30, 198.40 level. And if it breaks 185, I'm out. So that's PayPal. Now, we don't discriminate to the long side and to the short side. Chemonics. Now, just out of curiosity, what in the world does this company do? Surgical medical supplies. 1 year return, 38%. Not really doing all that great. Look at earnings per growth this quarter versus previous quarter, and look at it a year ago. Terrible. The stock is not doing well at all. All right? At all. So when we look at the chart, we will see how it doesn't even go up to the 200-day moving average. It barely hits the 50, and I like that. So the stock hit barely, almost made a new low. If you consider this a swing, it made it, I would say this is a fairly good low. Then it went up to the 50-day moving average, and now I'm expecting to move lower again. It may move a little higher, which is okay, although I don't think it will. But I would put a sell stop right below the low of this bar, which is right at the 84.60 level, a sell stop. And if it goes to 89, I would liquidate. So sell short at 84.50 level on a sell stop. That's a sell stop. And then liquidate if it goes to the mid 88 levels. I don't want to see it go too much above the 50-day moving average. It's oversold right now, and it shouldn't move back up too much. You may want to give it a little more room because the RSI has more to go, but honestly, I don't think it's going to go further. So if it does go higher up, I would just wait, and I would put a little sell stop right here, and I would give it maybe 3-4 days. And it's okay if it kind of goes a little higher and then comes back down. That's okay. But in terms of PayPal, excuse me, I think PayPal has bottomed out already, and I'm looking for more upside on PayPal. So PayPal, PYPL on a buy, and HAE to sell. Now, folks, everyone says you should follow smart money, right? Everyone. Follow the smart money. Follow the smart money. But who wants to be a follower, right? You don't want to be a follower. You want to be a leader. So instead of eating from smart money leftovers, Josh Martinez, that's right, my buddy Josh Martinez, is on the bad, dumb money trades and bets against them, often at the same time or before Wall Street piles in. Now, that's why I've teamed up with him to show you exactly how he does it. Now, this is very, very cool. He zeroes in on the bad, dumb money trades and bets against them. Can it get easier than that? Think about it. You got a trader who's right 30% of the time. What happens if you bet against him? You're going to be right 70% of the time. You got a trader who's right 40% of the time. You bet against him. You're going to be right 60% of the time. Think about that. That's why I've teamed up with Josh. He's got this figured out, and he knows exactly how it works. Our brand new system doesn't care about the current crisis, the coming recession. It identifies smart money spikes and allows you to trade alongside billions of dollars from Wall Street. I'm not kidding. Remember, if a strategy doesn't work well, flip it. Flip it on its head. That's what Josh has been doing, and it's working great. Again, you got a strategy that's right 30% of the time, you flip it. Now you got a strategy that works 70% of the time. Are you starting to see it? Think about it. You don't want to miss this. This is the coolest thing ever. Click the link below to start with the Fat Cats and earn up to 971% in just days. And Josh Martinez, he's an amazing trader. You're going to get tons and tons out of it. You don't want to miss out. Watch Josh and I join forces to show you how the strategy works. Zero in on triple digit, quadruple digit gains in a matter of days. You gotta check this out. I'll talk to you soon. Bye guys. Take care and have a great day.